Hey everyone, Brian from Bearable Traders here. It is a Wednesday, July 21st, and this is the midweek. I can't believe we're over halfway through the week already here, but yeah, this is a midweek video. This is where we review market action so far this week and then take a look ahead and see what we got coming down the pipe for the last 2 days here to finish the week off. Another week in middle of summer here. So as I mentioned last week, on last week's Wednesday video, I didn't like the market internals and the price action, so I sold out a lot of stuff, and of course we've had this pretty big sell-off, and I actually did short some stuff going into the weekend as well. Took advantage of the drop on Monday, and now we're coming back up here, and along a little bit just basically on the indexes. So not sure how much of a bounce we're going to get, but let's take a deeper dive and see where things might be going for the rest of the week here. Okay, and so always I like to start out with a quick plug for my book on Amazon, How to Swing Trade, if you have not checked it out yet. As I said, it's on Amazon and it's there for the taking. So let's get down and start looking at the market so far this week and try to figure out where we're going for the rest of the week here. Let's start out as we always do with the 10-year Treasury. Of course, I don't believe this is updated. It might be by now. We did have a pretty significant sell-off here. You can see we've had a pretty significant downtrend, and we did come down to that just under the 1.2, and now we're bouncing back up on the yields. And of course, this will be good for financials, which performed fairly well today, as we continue to bounce here from a pretty significantly oversold condition on the Treasury. You can see here the TLT, we just gapped up massively here, and I was expecting this pullback on after Monday's big gap up, and then Tuesday pullback, and you can see here Wednesday. Interestingly, we bounced off this 200-day moving average on the bond price, so it's sort of stuck right now. Just above the 200-day. We may be sort of getting into a period of consolidation here, which I'm not sure is which direction it's going to take the market. You can see here momentum's kind of waning both on the stochastics and the RSI. MACD seems to be rolling over again here, histogram sloping down, so maybe the interest, or maybe the bonds are going down while yields are starting to go back up again. But we look like we're kind of stuck in this consolidation range at this point. So all I can say is if these prices continue to drop, yields will go up, financials will benefit, and maybe the technology sector might start to get a little bit under pressure again, with money rotating back to the Dow and the IWM. So we'll talk about that a little bit more in a minute. So you can see here we're still in a downtrend on the transports. Again, this was one of the flags that I raised last Wednesday. The Dow transports really selling off here. We still have not broken the downtrend, even though we had a big down day on Monday, a bit of a reversal candle, and then we've had these nice this nice big turnaround Tuesday, you want to call it, and then another pop up today, although we could not get through this 20-day moving average. So you can see here the big volume bar. You could tell we were getting ready to reverse here, and mentioned that at the end of the trading day. If you were in our chat room, Bearable chat room, I was there at the end of the day, and I said I think we're going to have a rally tomorrow and maybe following days, and that's exactly what happened there. Got into a fairly oversold condition on all of the indexes, and you can see here what Monday looked like. Again, a bit higher volume than you would normally see on the Monday sell-off, and then we came back Tuesday, Wednesday, back up near this high again. I suspect that we are still going to have some challenges getting through it. I don't see us really breaking out. I don't see a kind of catalyst. The stocks that are reporting now, a lot of them are reporting beats on their earnings and their estimates, but they're still not performing that well after they do that. It was a similar situation last earnings season. I'm actually taking advantage of that by watching for tops after the earnings reports, and then selling calls above the top and just collecting the premium. So this is again, this is the Dow, two really nice days back to back. And I suspect we're going to kind of settle out here for the rest of the week. I don't see us breaking to new highs, and certainly I don't see us breaking down. IWM, again, 2 really nice days. Of course, when you get the interest rates sort of moving back up here, this is heavily weighted in the so a lot of the regional banks, which need the interest rates up to make money, and of course this has been the response with the IWM, and you can see here stochastics nice turn here after this down day on Monday, and hooking back up here. RSI bouncing off the oversold level and coming back up here. So these moving averages are probably going to maybe be some area where we can find some resistance again. And again, it's going to be a lot depending on what the interest rates are going to do for the rest of the week here. The Qs, sort of the same story here. Big down day, but you can see here this candle, we actually finished higher on the day from compared to where we opened up, even though we were quite a bit down on the day. And we came back. The only thing you can say about this is like the volume on these reversal days is pretty pretty small. So I would say not a lot of institutional participation in this bounce, and still a bit of a concern there, I would say. We'd like to see more institutions stepping in and picking up positions when it looks like we're getting oversold. The SPY, a little bit better volume, I would say. Again, sort of the same situation. Number of times we have bounced off this 50 moving average here, and I mentioned this again on the weekend. We were probably going to come down to the 50 here, and of course that's pretty much exactly where we held and bounced back up, just like we did here, just like we did here and here. So the 50 has been the here as well. 50 has been generally speaking the support for the SPY. So again, I don't see a huge catalyst to drive, take us higher at this point, but probably the rest of the week we turn a bit sideways. As far as the indexes go, the dollar looking like it broke out. It was going to break out, and now we've had this this turnaround here. This looked like a breakout on Monday, sort of a pullback here on Tuesday, and then a pretty significant sell-off of the dollar compared to the other indexes on Wednesday today. And you can see here there wasn't a lot of volume on the selling side, so we'll see where that goes. But again, we're into a sort of a significant area of consolidation, I think. These moving averages, the 50 and the 20, are still rising, so we are still technically in an uptrend. But it does look a little toppy here, and when you see a failed breakout like that, it makes you really suspicious of a possible move higher. So you can see here VIX really popped up on Monday with the sell-off, and again, of course, the buying brigade came in and popped the indexes back up, and then fear once again left the market. So again, I think it's a matter of the buyers are just waiting on the sidelines for these little sell-offs to happen, and then people are jumping back in. Let's take a quick look at, I don't think I've got Bitcoin on this one, but I do have it on this chart here. You can see Bitcoin on the verge of breaking down here, really lost 30,000 on this one candle, and we came ripping back up today. I think there's a conference going on that has Elon Musk and Cathie Wood, so maybe that was part of this this move back up, a little bit of enthusiasm generated by that conference. And I think maybe Jack Dorsey's in it too. So a lot of Bitcoin cheerleaders, and maybe with that supported Bitcoin today. But again, we are still in an established downtrend until we break this 20 moving average, and then even maybe break the 50. I would say we're still either in a period of consolidation or possibly even continue down. Let's take a quick look at the weekly here and see what that looks like. Yeah, again, we're trying to hold on to this 30,000 level by the looks of it. All these moving averages on the weekly are starting to roll over. The 20 already has. So again, a lot of airtime here between this level and this 15,000 level. So we'll see if we hold here, which is where we held here back in January. And a quick look at the sectors at a glance here. Let's see where we're at. Again, a lot of turnarounds here after that big Monday sell-off. We had a big turnaround on the consumer discretionaries. Apparently, there were some fears about the new Delta variant, and interest rates all kind of just evaporated here Tuesday, Wednesday. We popped right back up on a lot of the sectors here. Big gain on the industrials. This is going to be an area where if interest rates rise, and the industrials are going to do well. Technology, communications may not do so well. Materials had a bit of a pop. Even energy, which has really been in a downtrend, had a bit of a pop. So money rotated back into risk assets and out of the safety trades, which would be staples and the XLU. Again, healthcare just kind of trying to break out, but not successful yet. And although the moving averages are all trending up, and the financials, again, it's a couple of good days of the financials with the interest rates sort of coming back up here. So really the way to play these bounces, probably one of the simplest ways without going out and picking stocks, is just playing through some of the ETFs. And if you really want to go hard on them, you can go with like a TNA, which is the Drexion ETF, three times the move. And if you're looking for this technology sector, you can go with the Pro Shares Ultra Pro, and they've had a nice move back up here on the bounce with technology. But again, volume pretty light here, which is a bit of a flag for me anyway. So if I look at still looking at the FinViz site here and looking at the stocks below the 50-day moving average, still a lot of concern here with this level, 58% almost below the 50 moving average. Again, a third of the stocks below their 200. Not exactly the kind of confidence you want to see or kind of numbers you want to see for confidence in a move higher. So those concerns still remain, and we'll see what the transports, how the transports trade the rest of the week, and we'll be keeping an eye on these numbers too, and see which way they are going to be trending. So let's wrap things up for the rest of the evening here. Let's take a look at where the futures are sitting right now. Again, we've got a bit of a flat open by the looks of it right now. Everything's in the green, but just barely. So a lot can happen between now and the morning. You can see here the treasuries were all up a little bit here. You can see here treasuries were back up close to the 1.3% on the 10-year, which is what we watch. And as far as some of the commodities go, let's take a look. Oil's down a fraction. All the energy stocks seem to be, or energy commodities seem to be down a little bit. Gold's just down a little bit, and silver up a little bit. So everything looks pretty flat right now. So that's it, everybody. I hope you had a good day today, and rest of the week probably looking a little less exciting, but we are in the middle of summer, so expect maybe some sort of consolidation for the rest of the week here. We do have some earnings coming up. So before we wrap things up, let's take a quick look here. We've got AT&T, Southwest, we got Nucor at the open tomorrow. Of course, Intel will be interesting after the close on Thursday. Snap, Twitter, those will be a couple of interesting ones. And again, I'll be looking for opportunities possibly to sell upside calls. And they're naked upside calls, so a little bit riskier than just selling a covered call or buying a put. But I'd like to collect the premium that still remains after they report. So it's just a way I'm finding a good way to play these. American Express is on Friday. Sorry for the cutoff here, but Schlumberger and Honeywell, Kimberly-Clark, some of the industrials will be, and oil sector. American Express, obviously a reopening play. So we'll see what comes up this week, rest of the week here. And of course, hopefully we'll see you in the Bear Bull Trading Room in the morning, 8 o'clock with Engineering the Markets. we'll be live on YouTube with Jared, and then 8:30 we'll be trading the markets, the pre-market action with Norm and Peter. And Carlos is off this week, and then following we'll be trading the market open. So hopefully we'll see you at all or one of those events, and have a great rest of the evening, everybody. Bye for now.